Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what I expect for next week. I don't talk about this on the show, but I work a full-time job, almost 60 hours a week. And my goal is to step away from that and focus all of my energy here, creating more of the content you've come to expect over the last few years. Now, to make that happen, I'm rolling out a new premium version of the newsletter. So don't worry, there will always be a free version, but the premium version will go deeper. You'll get weekly video updates in the same Monday market moves type style. I'll show you company-specific stocks and exactly what mid-tier and junior stocks I'm buying or selling, and the entry points I'm using use our patented red, yellow, and green lines. The introductory price will be $19.95 per month for the first 100 subscribers. This helps me support my family, attend more conferences, and bring you more boots on the ground intel and alpha to your portfolio. We're hoping to roll this out in the next couple of weeks. So from now on, we'll use Monday market moves to focus on the broad markets and the ETFs in the commodities that we follow. And the newsletter will contain the company-specific information. I really appreciate you guys being here. None of this would be possible without your continued support. So thank you very much. All righty, let's go to the charts. Starting out as always with the S&P 500. We are down 2.4% for the week. So had just a waterfall sell-off there on Friday. It fell on weak non-farm payrolls and the Fed governor checking out, and basically it's Adriana Kuglar. I'm not sure if I'm pronouncing her name right or not. But basically, I think the dominoes are starting to fall here. Okay, so we've seen since Liberation Day, let's just kind of forget this. We've started to see little chinks in the armor, and we had a nice little waterfall sell-off right here on Friday, hoping that this continues to go down. We'll see if it does or not. But that would be amazing if it did. Got a note here, though. It is looking like it hit like a little bit of a double bottom here on the S&P 500. But looking at that bar, if we zoom in here on this bar, it's looking like it's going to go lower, at least at the beginning of next week, than higher. More likely to go lower. All right, and the dollar, the DXY, is up 1% for the week. So had a continued up and then fell down, but still inched out a slight profit for the week. So it's up a tiny bit, but like a lot of this stuff got smoked on Friday. Now, what is interesting here, whoops, back that up, there we go, is we are hitting right here on a retracement. So came right up and then right down and hit exactly on the 50% retracement. So this is just taking the bottom right down here of July 24th and then right up to the top, and boom, fell right down there on the 50% retracement. However, this is looking to me more like it's going to continue down, at least hitting down here on the 618, which would line up perfectly with the 50-day moving average and the 20-day moving average. So I got a feeling we're going to get some serious resistance there and probably a bounce, but I would see it going lower until then, and then probably minimum hit some resistance, support. But probably get a bounce right there. All right, and the 10-year yield on the 10-year treasury is down 3.9% for the week. So just a smoke show to the downside, blew through the 200, all of that, hit perfectly on this trend line that we had drawn here. So we weren't the only traders that had this trend line drawn. And basically what this is showing here, if I zoom in here, this is showing that when this yield goes down, this is showing that people are buying into the 10-year treasury. They're, with the uncertainty that's happening, more people are buying into the 10-year treasury, the benchmark for money. More people are buying into this, so that drives the yield down, right? If fewer people buy into this, this will drive the yield up, which was kind of my base case, but it looks like that's just not happening. It looks like more people are buying into the treasury, and it is and it's going down. So my bias for next week, although that is a really bearish looking bar, if we go out here on the 30-minute, we can see that it touched right there and then started to go up. I wrote that I thought it would go higher next week, but now that I'm looking at the chart here, I think it might actually go lower. I think the 10-year yield might actually go lower next week. So I'm going to stick with that one. All right, and gold is up 1.9% for the week. So same kind of thing, although the opposite on Friday, it went up and shot up. I drew this new little trend line right there. I mean, it just kind of got obeyed every single day, except not quite on Wednesday. I'll delete that. But this is the shorter term one. This is basically a 7-month trend line right here. Actually, now we're in October, so even more. And it looks like that's going to be some resistance to the upside. So I think we're probably going to break through here. I mean, this chart's looking pretty bullish. We're above the 20 and the 50. It's looking like it's going higher. Yeah, I think gold is probably going higher next week. I am still hopeful that we'll come back down here to the to this 200-day moving average. That's what this yellow line is right here, the 200-day moving average. I'd like to see it come back down to here. That would be over a 10% sell-off, and that would give us a massive buying opportunity on some gold equities. All right, and gold divided by the S&P 500 is up 4.4% for the week. So in other words, gold outperformed the S&P 500 by almost 4.5% last week. Still obeying this 200-day moving average. We are above this 50% mark. So right here at the 50% mark, that basically means that it takes 2 ounces of gold, 2 gold coins, to buy 1 share of the S&P 500. So far, that's being obeyed, and I would expect that it will be, and that it will follow this 200-day moving average as it continually climbs up. So I expect gold to outperform S&P 500 next week. All right, and PHYS. So the new guys to the show, this is where you start if you want to get some gold equities. Easy way to buy it on the stock market. This is essentially a warehouse full of gold bars, and you're buying into shares in that, and you can literally sell and buy with the click of a mouse. It couldn't be more convenient. And one thing you'll notice here, I got a lot of feedback last couple of weeks on the charts are hard to read. So what I did was, there used to be some hash graphs kind of in the background here on the black that kind of helped me with some of my time counts. I got those away, so now it's just black. And then what I did with the moving averages here is I basically doubled the moving average line. So you know, if you look at the moving average lines right here, I know there's a lot of you guys on TradingView, so this is how you do it. Click on that right there and then go down here, and that makes it thinner, and this makes it a little bit thicker right there. So I did that on the moving averages. Maybe that'll help you see it a little better. And then also only on this chart specifically, I did a 2x right here on the red, yellow, and green lines. Let me know if you like that, if you like this setup. For the rest of these, when we filter through the rest, I kept the moving average lines at a 2x, and then I kept these horizontal lines at a 1x. So if you like the 2x on both, let us know in the comments below. If you like some other setup, maybe what I'll do on the next one, depending on what you guys want, I'm here for you. If you want the moving averages at a 1x and these horizontal lines at a 2x, let me know in the comments below, and I'll adjust it for next week's episode. But let me know if this is easier to see when you're watching. Okay, all right, so Sprott Physical Gold Trust. All right, this one really looks like it's going to go up next week, kind of right along with gold, and that would make sense. And if you're new to the show, these are basically limit order lines. Okay, so if you want into some gold and these other equities as we run through here, or other ETFs, basically you set your first limit order here on the red line at 25 bucks. And then you set your second limit order in here at $24.25, and just read the amounts over here to the side. And then you set your third limit order in down here for $23. Okay, so that's how it works. And as it goes down, you buy more shares. That means the deal gets better, so you buy more. All right, pretty cool, right? Okay, now GDX is down 2.8% for the week. So interesting that gold went up, but the miners went down. Okay, so sometimes that's a little forecasting. Sometimes when the miners go down, but the metal goes up in price, that's a little bit of a forecast, in that it could be forecasting that gold is getting ready to roll over soon. So we'll see. But as far as GDX, it looks to me like it's going to go higher next week. And some of my reasoning for that is this bar right here. See how it's above the 20-day moving average and above the 50-day moving average? It kind of looks a little bullish right there. Kind of looking to me like GDX is going to move up next week. GDXJ is down 4.1% for the week. And this one looks to me like it's going to roll over and go down. Now, when we look at GDX right here, see how it's kind of rising up like this? And GDXJ is kind of falling down like that. Now, if you had your limit order set from last week at 65 bucks, congratulations, it hit on Wednesday and you're in. So you got your first limit order in there. I like a second limit order for GDXJ down here at $58. I might need to move this up a little bit to like 60. See, if we look over here, that would come in for a lot of support right over here. You got a bit of a gap. I think, $58 to $60 is kind of good for your next limit order. And then a stink bid down here at 51, which I think is pretty unlikely to hit. So anytime you see these green lines right here, I estimate there's probably a 10 or 15% chance that it'll hit. And that's basically your stink bid line. That is like, not likely to hit, but it takes no effort to put a limit order in. So you might as well put it in. And if you get lucky, then it'll hit. All right, and upcoming episodes next week. Okay, so we have one upcoming episode next week. It's going to be with Doomberg, our economic energy expert. He will be on the show on Wednesday, so go to the post tab in the YouTube channel and submit your questions for Doomberg, or if you're signed up for the free newsletter, then you will get a link right there to that, and you submit your questions for Doomberg, and I will ask him on the air. Also, in the Rule Classroom Plus, we're going to have Adrian Day on, and super excited for that. He always has amazing presentations. The last one he did was on options, and I'm curious to see what his presentation is going to be this time, but I'm sure it will be stellar. So there is a link down below to join us for the Rule Classroom Plus. You can try it out free for 2 months, so kind of get your feet wet, see if that's what you want, and then after that, it is $39 per month. All right, and lots of limit orders hit this week, and especially on silver. So silver is down 3.7% for the week. So it looks like it was caught right here by this blue line. That's the 50-day moving average. A lot of traders look at that moving average right there, so we need it on our charts. Caught right there by the 50-day moving average. Also, a lot of price action right back here around 36.50, which is kind of where it basically got caught. So I see quite a bit of price action right around there. That's probably why it hesitated and had a little hiccup there. Looking to me like this is probably carving out just a little bit of a bottom. I would be pretty surprised here if we went down to the next level, which would be around 33, maybe 33.50. This would basically be down around the 200-day moving average. I mean, we do have a little more room here on the RSI and the MACD to come back down, but I'm kind of thinking this is going to hold, so maybe on some of the silver juniors or the silver equities, if you don't have any and you want into some silver equities, I think now is an excellent time to like place your starter position. So some of your red initial lines, right? Okay. And the gold to silver ratio, gold divided by silver, the ratio as it sits right now is 92. So that means it takes 92 ounces of silver to buy 1 ounce of gold. I don't really see any tradable patterns right here. I do see that we're definitely knocking on some resistance right here. See how it hit 92 to 1 back here in February of 2024, and it hit 92 to 1 back here in March of 2023. So there is end right here again in February 2025, March of 2025. So I think it's probably more likely going to have gold underperform silver next week. In other words, silver will probably go up more or down less, however you want to look at it, than gold. And on top of that, it's hitting on the 50-day moving average as well. All right, PSLV. Now this is like your PHYS, but PSLV is your physical silver bed on the stock market. And congratulations, your limit order hit at $12.40. So now you're in the physical market for silver on the stock market. Congrats, give yourself a little golf clap. You're in. And as far as, okay, looks to me like we had a nice little bounce right here, probably going to go up with silver. I mean, it's kind of rare that the physical fund for silver will go down when the other one goes up or vice versa, right? So hit right around the 50-day moving average, right around the red line that we drew. So that is nice. You are in. Congratulations. And SIL is down 4.9% for the week. So hit right here on that red limit order line, $47.50. Congratulations, you're in. If you're new to the show and you missed it, you can probably do a market order on Monday and get in. I like this one a lot as your first mining stock bet on silver, right? It's an ETF that's really easy. You know, you guys can buy it in your brokerage account, super easy. You can, most of you can buy ETFs in your retirement account, so this is really easy to do. And the biggest holding here is Wheaton Precious Metals, just an amazing company. So it's kind of got a really strong backbone of starter company. And you'll see here that this trend line that we had drawn for a while, it broke down and broke below it. So we'll see if it comes back up to retest it and if it breaks through or gets rejected. But my money is that it's probably going to come back up and get rejected and come back down. But we'll see. We'll see. Time will tell. All right, and SILJ. So this is the Junior Silver Miners ETF. So this is kind of like SIL, but they have usually smaller companies in SILJ. Same kind of thing. We have this trend line drawn here, and we'll see if it comes back up to test it or not. If it doesn't, then we'll probably delete this next week. But it broke through the the 50-day moving average. And we have a little, I wrote a hairline of support here, and this will be at $14.12. If you really want to get down to it, it's $14.11.5. But I'm rounding up, and we know that we just hover over this bar right here and look right up here at the low, and we can see it's 14.11.5. But I would expect that it'll probably go a little bit lower on Monday, and it'll probably meet some resistance. Meet some support right around that line. Alrighty, and copper. Paging Dr. Copper. My goodness, look at that sell-off. This is amazing. This is the largest one-day percentage drop in 40 years. I read some other articles that said ever. I kind of went back on this thing and I thought, whatever, I'm getting lost in the weeds here on one little tidbit. It doesn't really matter. Okay, so looks like the 50% tariffs on imported copper are going to stick. Now, I would have thought that this would go up if tariffs were coming in, but I guess not. Shows you how much I know. Maybe everyone was front running copper, and now we have an answer, about these 50% tariffs, and that's, that was it doing a re-rating. Maybe it was, maybe this is actually priced correctly. Looking on the charts here, though, this looks pretty darn oversold, and look at what we're doing. We're coming right here close to our best buy line. Let me get this as a 2x just to emphasize that we're getting close here. So see how every time copper has touched this white line, we bought kind of with, I don't want to say reckless abandon, but basically we bought kind of just, closing our eyes and hitting the buy button, and it has worked out amazing. So I think now is close enough for government work. I think if you were to buy some copper equities like around these levels, I think you're going to be doing pretty well and you'll be very happy in a few years. The world needs more copper, and we need more copper mines. We need more big copper mines, and that's just not happening. So I think the spot price of this commodity is going to go up as opposed to down over the long term. And so far that white trend line has just been obeyed, and we are getting close to it. So keep your eye on that. All right, I imagine that copper's probably going to go up next week. All right, and COP.U. Okay, this one's really exciting. It is down 1.6% for the week. It's still showing that it's trading at a 20% discount. So this is a physical fund of copper that Sprott holds that you can buy with a mouse click, just like PSLV and PHYS. Right? And we call this our 14% arbitrage kindergarten method. If you basically just buy at $7 right here, my limit order hit at 702, which is strange because I put the limit order at 701 and for some reason it's filled at 702. I don't know, but whatever. That's what it bought at. So if you buy here at $7 and then put half a sell order. So basically whatever you buy here, sell half of it at $8 and then sell the other half up here at 9, and you can basically print money. So from 7 to 8, that's a 14% difference. And, it probably doesn't take too many people to blow this up. There's only 10 tons of copper that we can trade back and forth. But I think there's enough institutional money, enough funds that are playing this game that, us little guys can ride the coattails of them and basically just print money along the way. All we're doing here is we're just playing this Charlie Brown shirt pattern here, right? Boom, there was the sell, here's the buy, and it'll probably do that again, and we can rinse and repeat and just make some money. All right, and COPX is, what is it? Down 5.5% for the week. So looking absolutely great. Your red line hit right here at 30, I wish, $43.60. So that hit on Wednesday with the news, and right down there, we're getting very close to the next limit order line, which will be $41.75. I think this yellow line is probably going to get hit. Maybe copper's the spot price of copper is going to go up next week, and the equities are going to go down a little bit. It's looking to me like that's going to happen. I mean, it looks like we're going to have a re-rating on the spot price, and it kind of looks to me like the equities haven't quite digested what's happened, and like they're going to get a little re-rating. Not only that, you got the 200-day moving average right here. Maybe I'm being cheap, and you can just hit the buy order now. But I'm really excited about copper, and I hope it gets cheaper. So we'll see. 41.75 is the next limit order. After that, stink bid, $38.50. All right, and COPJ, this is the junior copper miners ETF. That one is down 5.9% for the week, and that makes sense. Junior copper miners should be down more than the major copper miners because they're more risky. But then when the copper price goes up, they should be up more than the major copper miners because they're more risky. All right, so it's down 5.9% for the week, hitting right here on the 50-day moving average. So looking like, if you don't have any copper and you want some, I don't think now's a terrible time. Start with the physical fund, and then move through the majors, the COPX, and then nibble here in the juniors. As far as risk curve, I would buy more of COPX and then a little less of COPJ. But I don't think now is a terrible time. And actually, maybe I should be moving this red line up just a little bit because there is some support right here around 24.50 or so. And that is on top of the 200-day moving average. All right, if this interests you, the technical analysis, like we're going over here in TradingView, then I have the thing for you. The Technical Analysis Basics trading series. All right, I started this, the Technical Analysis series, getting a lot of positive feedback on this. Got a couple more reviews this last week. Got one here from Joseph. The course was a good introduction to the chart patterns for those completely new traders and helpful for intermediate traders as well. Fibonacci retracement and Fibonacci extension sections were especially helpful at demystifying these patterns and getting the right TradingView setups confirmed. The course is a great value for the money. Looking forward to Steve growing his online community. Thank you, Joseph. I appreciate that. And another one here from Abdi, I'm sorry, I'm going to butcher your name. Excellent introduction to the charts and technical analysis. I'm really enjoying this course. Using the tools and analysis overviewed here by Steve, it makes it a bit easier to make some decisions when it comes to buying or selling. With the information provided in this course, I am able to better navigate the decisions that I have to make. I wanted to get a little more knowledge about the TA, technical analysis, and this course is perfect for me, and I would highly recommend it. So thank you guys. I appreciate the reviews and the positive feedback. One thing I should note, so there is a free version of TradingView, and there'll be a link down below here if you guys want to try it out. Now, one thing to note, with the free version of TradingView, you can only get 2 indicators, okay? And what you see here on the screen, I've got 6 or 7, okay? So if I had to pick only 2 indicators to use for the free version, I would probably pick RSI, which is this one right here, and I would probably pick the 200-day moving average. It's kind of a toss-up. Like I I might choose volume over the 200-day moving average. In other instances, I might choose the 200-day moving average over volume. I think those are indicators that just about every single trader has on their screen. And, we need to be looking at what other people are looking at and what other computer programs are designed to buy and sell on. And those are very, very common ones, right? The RSI, the volume, and the 200-day moving average. So if I got to pick two, but I had it in my head, I'd probably pick RSI and the 200-day moving average. Now, in order to really, really get the most out of the course and follow along, you're going to need to upgrade to the paid version. Now they have 5 versions, but I don't think anyone needs the number 4 and 5 here. I have the number 3 version. So there's the Essential, Plus, and Premium. I personally have the Premium version, but everything you see on Monday Market Moves here, everything you see on the charts, you can do with the Plus version, and you can darn near do with the Essential version, which is about half the price of that. So to save you guys some money, maybe start with the Essential version, and then if you want to, you can upgrade up to the Plus version. But everything you see here on Monday Market Moves, you can do with the second version, which is the Plus one. There'll be a link down in the notes below. Just start with the free version first and see what you think of that. Okay, and moving on to uranium. Is up 0.5%, so up 0.5% for the week. I think we're basically ironing out a floor here around $70 a pound for uranium. So you can see there's a lot of price action here around $71, dipped down here into 69, shot up, and then came right back down here to that same level. So I drew this trend line. This isn't even a trend line really, because you need 3 points to attach a trend line, and I only got 2 here. But maybe I should draw an arrow instead. But basically, what I'm trying to emphasize is that it looks to me like the price action, like we've kind of put in a floor here, and I think what we're doing here is I think we're right around here. I think we're kind of like there, right? And I think we're about to move on the way up. So that's pretty exciting for the uranium equities. Now, that being said, I know a lot of you guys got some in down here, and you sold off and took some profits in down here. So let's go to the first one on the list is SRUUF, okay? The Sprott Physical Uranium Trust. So just like gold, silver, copper, uranium, they have a physical fund as well. So that's pretty cool, right? You can buy physical uranium. This is going to be the least risky way to bet on the uranium market. I like a limit order in here. Why don't I have my red, yellow, and green lines? Well, whatever. Okay, we should have a red line right here at $16.50. I think that's a great starting position. And look at where it closed on Friday at $16.42. So I think that is a good starter position. If you're really cheap, you could put in a limit order for $16 and it'll probably hit. Okay, so I think now is okay to get a starter position if you have none in uranium. But our kindergarten method of looking at the premium and discount on Sprott's website, the discount right now is about 5.5%. And we usually like to only get in if it's north of 12%. So we're not there right now, but it does look pretty compelling as a setup here on the charts. Sprott also bought another 50,000 pounds of uranium, taking it off the market. So the total amount of pounds in this fund right now is, 68.4 million pounds unavailable to the utilities. Now, to put that into perspective, the average power plant burns about 500,000 pounds per year, okay? So we could essentially, what is that? How many hundred nuclear power plants could we power for an entire year just on the uranium in this fund? I think this thing is going to do very, very well. All right, and URNM absolutely tanked during the week. Fantastic. Went down 10.6% for the week. Interesting here, kind of setting up a bit of a double bottom. I mean, it's not perfect. Ideally, you want double bottoms to go flat like that, and this one kind of angled down. So it's not great, but it is there. So a little bit of a double bottom with a reversal bar to the upside. If you were really on it on Friday, you could have bought some. I prefer this level down here at $41. That lines up pretty good with the 200-day moving average. We do have a golden cross right here. So if you have no uranium, now isn't terrible, but I like this level down here around the 200-day moving average. And actually, I should probably move that up slightly, maybe to around 42 bucks instead of 41 for your first real limit order. All right, and URNJ is down 13% for the week, and that makes sense because these are the junior miners, and URNM is more of the majors, right? And now this one is pretty textbook, and I was probably off on my lines right here. So I think the red line should be right up here around the 200-day moving average, and then this yellow line should be the green one, and then this green one down here we should probably delete. So what I'll do is I'll make this one a green line, and then I'll make this one a yellow line. And then what is the 200-day moving average at? That's around, we'll just call it 19 and a quarter. And so I'll edit this one right here, and you just hit the little gear right there, and we'll make it 19.25, and then we're going to make it red, and that will be your first limit order hit point right there. But look, we got a golden cross coming in right here, perfect little double bottom with a reversal bar to the upside. If you zoom in on this thing, I mean, that looks pretty good. I can make it a candle here so you guys can see it better. But yeah, looking really good there on URNM, as a starter position. I think, if you just kind of buy some on Monday, assuming that it's above the 200-day moving average, I think if you have no uranium, that is a fine time to make an entry. All right, and crude oil. Okay, so this one's kind of exciting. Up 3.5%. No, what is that? 3.33. Okay, 3.33% for the week. Now, we had for a while, we had a bear flag drawn. So we've got this right here, right? Goes down. And then here was the bear flag, right? And now it broke down to the downside. So we had a measured downside target. I mean, the downside target was like 51 or something. I didn't think that was going to happen, but I thought it at least might get to like 60 or maybe even 55 down here. Now, it didn't. It broke down and then kind of put in a little U right here and then came back up. But check this out. If we zoom in here and we draw a trend line, and we just, it doesn't have to be super scientific, just draw a trend line like that, and you can see that from down here to right there, what happens here is this is basically like hit there, hit all along here for the bottom part of the bear flag, came back down, used the 50 moving average as support, broke through the 200 and hit right on that same trend line again. Then we get a pretty bearish bar there on Friday. I think it's more likely than not that, we kind of had a false breakdown here, broke back up, came right back to that trend line, and then back down. So it looks to me like it's more likely than not that oil is going to be moving down next week instead of up. So look forward to that. And the way we can do that and profit from it is you could buy something like ERY and basically bet on it going down. Or what you could do in your long-term retirement portfolios is you could buy into XLE. This one is down 1.7% for the week. And looking like it might come up here for a little double bottom right there, right around 85 bucks or so. So maybe I should actually move this red line up to like 85 instead of 84.50. Yeah, tomato, around that level. Maybe 85 is better than 84.50. I think now is okay, but see how it broke through this 50-day moving average? We got increasing volume right here. I think it's more likely to go down next week than up, especially with the commodity, crude oil itself, looking like it's going to go down. So 84.50, 81.50, and then 79.25 for your stink bid on XLE. And natural gas is down 0.9% for the week. That is nothing for natural gas. It's pretty regular. This thing will drop 10 or 12% in a week. Not this week, 0.9%. Decent baseline of support around $3. So if you kind of iron this out, the history of natural gas right here, quite a bit of price action, either using that as a baseline of support or using it as resistance around $3. So it looks to me like natural gas, looking at this price action, I mean, that's almost like kind of a bearish flag formation. Looks to me like natural gas is probably going to go lower next week. And here's a natural gas ETF, First Trust Natural Gas, ticker is FCG. Foxtrot Charlie Golf, if that's the pilot in me talking. And right here, so first limit order of $23. I like that one. So basically, this is the first time I've covered this ETF on Monday Market Moves. But I think a limit order now is okay if you have none and you want some. Maybe, you know, the price action is a little bit lower than that. So maybe you go like 22.75 as your first limit order. Then after that, 21.75 has a bit of price action and a stink bid at $20.50. This one was down 2.2% for the week. All right, and coal. So this is thermal coal is up 1.5% for the week. Kind of seems to be following what Matt Warder said. So remember to check out our interview with Matt Warder from last week. And seems to be following this. So he thinks it's going to be moving up and then coming back down into shoulder season around October, November, and then back up again. So if you're up on some of your coal equities, I know like a lot of you are up on BTU, a lot of you are up on AMR because you bottom picked it. Nice job. Might be time to trim a little bit on there. Now we are up above the 200-day moving average here on thermal coal. So that is pretty bullish. But if Matt Warder's right, this might go sideways for a bit and then correct back down. As far as next week, it looks to me like thermal coal will be moving up. And met coal, the stuff we use for making steel, metallurgical coal, is up 5.3% for the week. So this one's below the 200-day moving average, and it is also below the 50-week moving average, okay? So it's got to fight through that 50-week moving average here on the weekly. Same thing for thermal. It's got to fight through that 50-weekly moving average on both of them. But they both look like they're probably, this one I might have no opinion. This might be flipping a coin one way or the other. I'll say down on met coal next week and up on thermal next week. All right, and our favorite coal ETF, ironically spelled COAL, is down 8.6% for the week. So fell through the 200-day moving average, fell through the 20, and the next level of support right here is going to be the 50-day moving average, which is right around 18 bucks or so, maybe 18 and a quarter. I like first limit order at 17.75, then 16.70, and then a stink bid down here at 15 bucks. Bias for next week on this one is lower, and I think this limit order down here at 17.75 will hit. All right, platinum. We are having our platinum expert on the show here very soon, not next week, but the week after. Ed from the World Platinum Investment Council. Okay, so we've got a downward channel trend line. Let me back up here and go to the weekly here on platinum. So going back here to 2008, we got a downward channel trend line that just kind of hits and almost hits on a whole bunch of points. I think this is a valid trend line. Had a convincing breakout here a couple of months ago back in May. And I don't think we're getting down to these levels again. I think this is basically the new price of platinum. Now, there is a tiny bit of support right here. So if you zoom in on this one bar right here back in May of 2021 got to $1,281. And then intraday right here on this one, it got to $1,271. So within 10 bucks of it, I think that's decently valid right there. It hit it on Friday, intraday. And then it's just kind of hanging around the 50-day moving average, just hanging around. So I think that can act as our first level of support, the 50-day moving average, and also that, we'll call it 1275. We'll split the difference there. I think that could be a basic level of support. And so it looks to me like platinum is going to go up next week. Palladium, the other silver metal, is, what is it? Okay, so platinum was down 7.4%. Palladium is down 2.9% for the week, and it's kind of touching around a similar trend line. So we got a trend line there around, we'll call it 1,200 bucks, maybe 1175, and it just kind of hits right on. Well, I got down to the weeds here, 1184. There we go. Looking like it's got some support there. There is an upward channel trend line right here that seems to be obeyed, and it hit that on Friday. So I would expect Palladium to go up next week as well. And if you want to buy both of these on the stock market, the super easy way to do that is SPPP. This is a physical fund where you're buying into bars of platinum and palladium sitting in a warehouse. Thank you, Sprott. The 50 weekly, the 50 daily moving average is acting as support right here on the daily chart. If we go to the weekly chart, hit almost perfectly here on the 200 weekly. So this is looking really bullish that it touched right there and then bounced up, and liking that one a lot. And yeah, I'm excited for this one. You know, we probably could almost move the red line up here, and maybe we should. I got it down here at 11.25. Maybe we should have it up here around 12 bucks if you have none. I don't think now is a terrible time to get it. If you do have some, then I would put your next limit orders at 11.25, 10.50, and $9.50. All right, and platinum divided by gold. So this tells you how many ounces of platinum it takes to get 1 ounce of gold. And right now, 1 ounce of platinum will get you 0.38 ounces of gold. So not even at the 50% mark. And if we zoom out here, this is really cheap. I mean, there's times in history where it takes 2 ounces of platinum to get 1 ounce of gold, and we're not even at, you know, half an ounce of platinum. I mean, it is just really, really cheap. Okay, so I think that in comparison to the other metals, platinum is super cheap right now. I don't really see any patterns here on the daily chart other than we have a golden cross, which is the 50-day moving average moving above the 200-day. Caught it right there, and I think it's just holding out. And then we take platinum divided by silver, and right now it takes 35 ounces of silver to buy 1 ounce of platinum. And if we zoom out on the long-term chart, we can see that that is really cheap, and I emphasized it here by writing it in green with a bunch of O's. So cheap. There's times in history where it takes 150 ounces of platinum to get 1 ounce of gold, and we're at only 35. All right, and the Bloomberg Commodity Index is down 2.5% for the week. So got a smoked down on Wednesday, just with the tariff news. I think most of this came from copper. You know, copper makes up, I think, like 6 or 7% of the Bloomberg, something like that. So it makes sense if copper drops 20%, this is going to drop quite a bit as well. Looks a little more dramatic than it is, but I like limit orders around, where the hell are my green lines and red lines? Okay, I got to put those in. Okay, so I like, if this would be the red line right here. I like this one right now. So a buy now on the Bloomberg looks good to me. And then a second one I would probably put down in here around 97, and a green line would be down here around 93, but that's not going to happen. All right, and nickel, the commodity is down 2.3% for the week, so still hanging around that 15,000 mark. Closed the week at 14,827, so close enough. NIKL is down 7.1% for the week. So right here around the 50-day moving average, check out this little double bottom right here. And yeah, I mean, almost a picture perfect double bottom. Not picture perfect, but that's a double bottom. Okay. And you got the 50-day moving average. And you know, now that I'm looking at this looks like a perfect 618 retracement. Let me just, before I talk out of my, yeah, okay, so look at that. Okay, so not exactly perfect, but we take the bottom here up to the top, and it came right down here, got a tiny bit below the 618% retracement, but close enough for government work. There's not a huge amount of people. I think this fund's only worth like 13 or 14 million. So it's probably like everyone watching the show, and that's it. We're the only ones trading this thing. So good on you guys. You got it at the 618 and bounced right up from there. I think if you have no nickel and you want some, now is fine. You know, maybe I could move the red line up here a little bit. After that, I like 11 bucks, 9.50, and $7.50, which is probably a pipe dream. I really need to move that up. All right, and our favorite metals and mining producers ETF is the PIC ETF, and that also looks like a 618 now that I'm looking at it. Let's see. Put myself on the spot here, and we'll take the bottom of that up to the top of that. Yeah, look at that. Okay, so we got a 618% retracement right there, right on the 50-day moving average. Just below it, you've got the 200. I like that a lot. I think now is okay, right? We still have some room for it to go down here in the RSI and the MACD. So, you know, it's not like a back up the truck moment or anything. I'm not saying that at all. But if you have none and you want some, I think now is okay. Okay, you got a golden cross here in the 50 moving above the 200-day moving average. You have a 618% retracement. I think that's fine. And then as far as limit orders, if you already got some, $37.50, $35, and $33. Looks to me like it's probably going to go lower next week. All right, and Bitcoin. All right, so last week we were saying that to watch for the 113,000 level to the downside and to the upside around 120, 121. And it looks like it just came right down here to the 113. We're sitting right now at 112. We'll see where it ends out when this airs tomorrow morning. I'm recording this on Saturday afternoon. Came right back down here to the 50-day moving average, and it looks like that's just acting as a level of support. So this one's down about 6% for the week. As far as levels, I'm going to say that I think that 50-day moving average, and I think this 38.2% retracement on the Fibonacci extension is going to hold. And I would bet that Bitcoin is going to move up next week, but we shall see, and time will tell. Alrighty, well, I hope you guys got something out of that. Be sure to check out the free newsletter. There is a link down below, or you can go to stevebartonmoney.com and sign up for our free newsletter. Thank you guys for being here. I will catch you next week, and you have a wonderful rest of the day. I'll talk to you next time.